So you'll put your screen up there.
Yes, Jeremy generally handles that. He scrolls through as the agenda updates. If I need to share anything or you guys would like me to share anything, I can share screen. Kathy can share screen as well. So, yes, we will put everything up there. It is 7 o'clock.
Okay, it's 7 o'clock. We'll call the meeting to order. And I think the first order of business is the roll call.
Yes. So, Chair Trainer and Member Bowman
Yes.
and Member Pavalia
Yes.
and Vice Chair Priven.
Yes.
Right, great. So we'll do the land acknowledgement, which is section 1, before moving on. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lisjon. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. Okay. So the next item on the agenda, number 2, is the approval of the minutes from the November 2nd, 2022 meeting.
Oh.
Is that yours?
I move to accept the minutes.
Second?
Okay, so roll call. Chair Trainer
Yes.
and Member Bowman,
Yes.
Member Papalia,
Yes.
and Member Priven.
Yes.
Motion passes.
Okay, motion passes. Minutes are approved. Item number 3 is the section for announcements for staff or committee member announcements. Do we have any announcements?
So I'm curious that perhaps when might be an appropriate time for Heather to kind of give us a report of what happened at the city council meeting. We had a couple things that we put forth, one having to do with the our plan and work plan and number of meetings, and the other one had to do with a motion to dealt with that $1.25 million that could have been put towards the part of it, if not all of it, to the unfunded pension liability. And if that's, is there parts of the agenda that you think might be better, more appropriate to hear about that, or?
I can talk about that now. So for the work plan update that was requested by council, that went to council on, I think it was it November 9th, something like that? And they just accepted the update that, had the status of each work plan item. And then your recommendation for the use of surplus was added as a note in my staff report when that went to council for that. And council ended up just reserving the funds and not, they made one additional contribution to pension, but and it was $500,000. And then they didn't do anything else with they just let it sit in fund balance. Was there something else that you wanted me to touch on?
No, those were the two things that, kind of an update to, and because we actually had motions on that, those were action items, and I think it's good to have in the record, for people who, for now and anyone who's watching or viewing in the future, that these were things that we acted on and there was action taken at the council level regarding those.
I actually had a follow-on comment or question to that. So we did do that work plan report that we had worked on, and we finalized shortly after our November meeting. And then I had emailed you our report that included just all of our comments with respect to the various work plan items. I think that was November 29th, roughly. Did that report ever make its way to council, just to be submitted as a memo for the council?
I will have to go back and check. I know I sent it on to the city manager, and then I know that I had met with her and we talked about when the best time to bring some of your suggestions forward is. And normally how it works with committees is the work that they do is brought forward, or the suggestions that they make is brought forward when there's action that the council is taking. And none of the items were like things that were on the council agenda for them to take action on. Some of them, like your pension, the work that you did on the pension, and we brought the tax revenue measures forward when they were doing their work on the ballot measures. So the pensions, we want to bring forward your memo as part of the budget, the next biennial budget, to kind of explain, you did all of this work, and, staff have done work on it, and, staff are suggesting to move forward with, there's a handful of things that I'm going to be suggesting, and you'll see that when we bring the biennial budget forward. But we're going to include your memo then, since that's really the time that council's taking action. A lot of the other things, there's really no, I'll double check with the city manager, but most committees, like I said, they bring those things forward when there's action on an item. They don't really come forward like on their own, I guess, is what I'm.
Yeah, I see what you're saying there, but it seemed like we had, I don't know, that this committee had come to an agreement, and there's been some public urging that there should be more regular communication from this body to the council, just in terms of, when you make your quarterly budget presentation, there might be something that was discussed in this meeting about that we think the council should hear about from us. And I think we had discussed that probably it'd be a good idea to make maybe more timely reporting to the council, and it could just be a memo or something that accompanies your report. If we can't go in person to present that, just this is the committee's view on that, or something like that. And I do feel strongly that the pension issues are really important, and that we need to start highlighting those. I feel like now, why wait? Because there will be updates that we'll do. The pension subcommittee is going to work on updating based on the latest actuarial report that's come out. And why, I guess, the time to raise the awareness, I think, is anytime, and then we can talk about it again during the budget proposals that happen in the spring. So I guess that's just my feeling, is that it would be better to put a memo to them to include it in the packet. And if they come back to us and say, stop bothering us, then that's fine. But I don't think they're going to do that.
I can definitely attach something as part of my quarterly update when I bring it to council, if that is what you'd like. And then, other than that, unfortunately, there's really, unless the council puts it on their agenda, there's really no way for me to push that.
I guess, is there some way then to have on their regular agenda as a report from you? Is there some way to make that a report from finance manager and the finance committee, like a joint, not joint, but like you said, just add the finance committee on the end of
Yeah, I can include as an attachment something if you'd like to, you know, say, this is what
Yeah.
we've worked on, include that. Similar to when we transitioned from the elected treasurer to the appointed treasurer, and which is, like Francesca was saying earlier, which is why this committee kind of became a thing. I added the treasury report on my quarterly reporting. We could just add that as well as a like update on here's what the Financial Advisory Committee is working on and would like council to be aware of or something.
I feel like the communication of the work that we're doing is, I guess that's the point, right? If there's a work plan and we've approved a work plan, the council has approved the work plan, and we diligently go through and we talk about the revenue and the pension and just all these other things, shouldn't they be hearing from us about that?
So my experience with how other committees have presented this before is generally when they bring a new work plan, they have a summary of here are the things that we did the previous year or 2 years, I guess. I don't remember what it is. And so that is when they would present some of their work, unless, like I said, there was something that council was taking action on. And then they bring, either staff generally will bring the recommendation of the committee forward as either an attachment memo or just in the staff report saying, here is what the committee recommended.
When we first started, I produced what I thought was our mission statement, which was a summary of the ordinance that created this committee. And I took out all the whereases and therefores and on this date, blah, 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 just to get down to it. And we have a rather broad mandate to advise the council on a variety of things, which is to facilitate government accountability, sound and transparent management of city financial resources, review and make recommendations on all bonds or other debt instruments to be issued by the city, and make it, this is, and I've just develop a long-term financial plan for the city, a review of the annual audit and management letter, and recommendations related to the annual audit. That's literally in what it says that we're supposed to be doing. So I think that when almost every time you bring the budget to them, it's our job as a committee and as the representatives of the citizens of Albany and the taxpayers to bring our input to it in a very direct way, if possible. And the first, 2 years, we really didn't have enough time with only 4 meetings a year. So but this year, I think we can handle everything that's on our plate.
Okay. Any other announcements? Okay. Do we need to do public comment after that section, or do we just sort of move into general public comment at this point?
Just general public comment.
Okay, so we can open the floor to public comment at this point.
We do have 2 members of the public attending, and now we have 1 that is looking to. Mr. Bone, you're muted. There we go.
Yes, thank you. I'm on, and I appreciate the opportunity to comment. I like what I heard the first couple of minutes of this meeting. I appreciate the FAC really taking more of an aggressive role here. If you don't, and you only present it matters of financial nature when the council is going to take an action, we're not educating the council on what could sink the ship here. And this is a very serious problem. And I know the committee has taken it seriously, and I can't tell you how much I appreciate the work you're doing. I would urge you to be aggressive on your reports to council. I think it's important that they understand the depth and scope of this problem. I think it's large enough that it can sink the ship if it gets out of hand. And that's the core of what your charge is here and your duty. And I know you understand that. And I was very gratified to hear what you're saying in the first couple minutes here. It's very positive for me as a retiree. And I think, just so you know, I have other comments to make later in this webinar or this meeting, excuse me. But for now, I'm very, very pleased. I looked at some stats here, and I think there are approximately 378 members of the city, past and present, current members, that are part of these CalPERS plans. And that's a significant amount of people that your work will have an effect on, and I'm sure it'll be a positive effect. That's my hope, is the council understands these problems fully, recognizes them, and takes into account of the good work you're doing here. But I think it's very important to get your work to the council as it's produced. And I've said this before, if we go back a meeting or two, Mayor Preston talked about folding some committees into other ones, or possibly eliminating some. And a lot of that was because, you know, he or they didn't feel the committees were relevant. I can't tell you how relevant you are. I started the city in 1977. This is the most relevant committee I've ever seen since then. And I appreciate the seriousness of which you're taking this matter. And that's all I have to say for now. I have a couple comments later throughout the meeting, but thank you so much.
Okay, thank you, Mr. Bowe. Was there another comment, or did that person drop off?
It looks like that was the only public comment.
That was the only one. Okay, great. All right. Okay, so that brings us to section 5, which is the presentation section. So the first one is 5-1, which is the fiscal year 21-22 certified financial audit report.
Yes, so the audit was, the city's auditor has had a number of key staff leave, and so they have replaced those staff, but they're a little bit behind in getting their work done. So they were unable to provide the report in time to actually present you the audit this meeting. It should be available for an April. We're potentially going to schedule a special meeting in April. I was able to see the draft financials, which match with all of the numbers that I have, and so I have some information to present to you, but it is not like final. It's just, I just don't have the copy of the report. Let me. I can't play the. I can't find the. There we go. All right. So, from the financials the draft financials that I have, we have a fund balance, a general fund balance of $10.7 million. That is that is our general fund balance, the end of fiscal year 22. So fiscal year 22 ran from July 1st, 2021 to June 30th, 2022. Council has a 25% fund balance policy that they passed to reserve in case of emergency. That is 25% of the current budgeted expenses, and that is approximately $7 million. So we clearly cover our 25% fund balance policy. We have which means that we basically, the next thing is we have a budgeted, assuming that council passes the budget updates that staff are suggesting, and I will go over in the next item, there is a budget deficit of, or a budgeted deficit of $1.476 million for fiscal year '23. So if you take the 10.7 million, you subtract the 25 million, I'm sorry, the 25%, which is the 7 million, and the 1.476 million for the budgeted deficit, that leaves us with approximately 2.3 million at the end of fiscal year '22 that would be considered a surplus. And this is the funding that you, Francesco, or Member Papalia, you had mentioned earlier that we had talked about from fiscal year '21, where we had a surplus in fiscal year '21 as well, and there was suggestions on how to spend that. We ended up putting a small amount into the cap reserve, and I'll go into what that means in a little while. We made a $500,000 contribution to CalPERS, and we then we just kept the remainder in the general fund. The CAP Reserve Fund, or the Climate Action Plan Reserve Fund, was created as a side, a kind of ancillary thing to the increase in the utility users taxes that was passed a few years ago. The voters passed that tax with the wording in it that the council would endeavor to spend 1/3 of the increase on climate action plan items. And so the council has directed staff to incorporate some of those into the budget and pay throughout the year. However, at the end of the year, I also have done a calculation that says, okay, this is what that 1/3 would be. Here's how much we spent on climate action plan items, and then the remainder is for fiscal year '22, this $143,000. So the idea is to, since we do have a surplus in the, because in the spirit of what the voters passed, take that money and put it in a reserve fund. This is general fund money. It can be reallocated at any time, just like any of our other reserve funds. But to withhold that for larger climate action plan projects that happen in the future. So that is what we're suggesting for the CAP Reserve Fund out of the 2.3 million surplus for fiscal year '22. Staff are also going to suggest that we hold $756,000 to offset the increases to the general fund operating budget that are due to pension increases over the next several years. From past experience, we know that making contributions to CalPERS, yes, it helps on the interest that they charge us on that unfunded liability, and it lowers our unfunded liability, but our actual direct cost is not affected. We made a $1 million contribution one year, and it reduced our payment the next year by $75,000. So the idea is to hold this money and use it to offset the increase in the operating budget that is associated with the increase in the unfunded liability payment over the next several operating budget years. And then with the rest of the surplus, the 1.4 million, staff are again suggesting that we fund our asset reserves. We have several larger items that are coming up. Specifically, community development has several plans that need to be updated. We have our city general plan. We have a handful of other larger plans that cost significant amounts of money to do, to complete. And so we're suggesting to make a $100,000 contribution to that fund. The EMS fund is currently down to just over what is considered the minimum funding level. The minimum funding level was set in the council's capital asset reserve fund policy as basically, this is the ideal of what we will have in that fund in case something breaks and we have to replace it now. And so, as you can see, some of the accounts, the police department reserve fund specifically, have gone below the minimum funding level because we haven't been funding these accounts, but we have need. We've had to replace vehicles, we've had to replace other assets. The suggested contribution on this slide is in line with some of the items that were shown when we did our last biennial budget as the items that staff saw a need for in the next, at the time when it was passed in 19, over the next 5 years. So now we have 3 years left. And so we've replaced some of the assets that were on that plan and done some of the work, but we haven't been funding this, so we haven't really spent as much as we would like in order to keep our equipment and everything where it should be on the replacement schedule. So without being able to actually hand you the completed audited financial reports, this is what I have for you today so that you can potentially start to digest that before you get the report, ideally next meeting. Are there any questions on this?
Yeah, I have some questions. So the first one is, I guess, while we're on this slide, so these are all sort of a capital account, so paying for equipment or a roof or whatever. And it's tied to both a minimum balance and also some kind of report that's been done that says, deferred maintenance, blah, blah, blah. Can we see that report, or is that or is that where?
So we did a complete asset inventory in February of 2020. We actually had someone come out and go and say, okay, you have this car and this and this and this, and it's in good condition or whatever. And that was provided to in addition to our auditors, all of the department heads to basically be like, does this match with what you are thinking you need to do? And so when we did the biennial budget package in 2019, which is available on the website, there is a section where it talks about each of these reserves, and there are lists of the major items that each department said, I'm going to need to replace this within the next 5 years, I'm going to need to replace this, or I'm going to need to use reserve funds for this plan or this whatever.
Okay, but the minimums are not necessarily tied to those. I mean,
No.
I guess I'm looking at the city, minimum's 250, balance is 372, but there's a suggestion to increase it even more. So I'm thinking that the minimum really has no relationship with what somehow has been identified as the need.
No. The minimum is literally just, this is the ideal of what we would have in there in case something unexpected breaks.
Right, okay.
The rest of it, staff uses to basically plan out work. Public Works specifically is constantly asking me, when are we gonna know how we're gonna fund these? Because they're trying to plan the different projects on, replacing items, making sure there's standard maintenance that's goes on a certain schedule, but until they know they have the money, they can't really plan the work.
Okay. And what's the cadence for kind of updating that?
The asset?
The capital requirement plan, what you recall that went into the biennial budget.
So we're going to update, the staff is going to update that as part of the next biennial budget, saying, okay, we've done these things, here's what we think we're going to need to do in the next 5 years. And we will most likely schedule to do a physical asset inventory every 5 years.
Okay. Another question, but I don't want to hog all the time.
I just want to have a follow-on question
Yeah.
to what you said. So it's great that we can put this additional 1.4 million into this asset reserve. When was the last time we added to the asset reserve?
When it was funded, when it was passed in 2019.
Okay.
There are some that are funded, so there's the Community Development Reserve, you'll see 3 different fund numbers there, and they have fees associated with permits that go into these accounts to help save for the general plan and for some technology upgrades. The Recreation Reserve Fund has a small amount of money that is attached with class fees that goes towards replacing the assets that are used by the classes. And then the Fire Department Reserve Fund, we're actually going to be bringing a potential update with the biennial budget for when they have their, they get reimbursed for helping with wildfires. Part of that is for the equipment that they bring and use. And we're going to be suggesting that anytime we get one of those mutual aid reimbursements, the portion associated with using the equipment would go in their reserve fund. So there's a handful of these funds that have small but ongoing funding. But the other ones, the IT Equipment Reserve Fund, the Police Department Reserve Fund, are only funded when council actually makes an allocation to the funds. The idea would be to eventually include it in the biennial operating budget to say, we know we need to replace 3 cars a year, blah, 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 blah. But with an operating deficit, a budgeted operating deficit, we haven't done that yet. So that is a goal, but it is not something that is currently happening.
So we're fortunate that we had this nice surplus this year, and we're going to try to take advantage of that and set some of it aside.
Yes.
I have a question. So the reserve fund you said was created in 2019?
I think so.
And how were the minimums determined?
I talked to the department heads and said, what would it cost to replace a really expensive piece of equipment?
Gotcha. Mm-hmm. And are these all of the different reserve funds that exist?
Yeah, except for the CAP fund, the Climate Action Plan Fund. That one was added later, but I didn't include it here because that was on the last slide.
Got it. Yeah, I think it'd be helpful to understand what's driving some of the increases or the suggested contributions in each of them and how they might be prioritized, essentially, in the eyes of those that were requesting that money.
So this is a pre-presentation of the audit, correct? And we might get the audit, the full presentation when?
I'm hoping that we can schedule a special meeting in April and you guys would receive the audit then.
Then that audit goes to the council after that?
Yes.
April. And it's a special meeting in April rather than just our regular meeting in April?
Yes.
Why?
Because you only have 8 meetings a year, and so the way it worked, it was February and March, and then May and June, and then July, because,
So we didn't have an April one.
right, you didn't have a February meeting, so we're gonna have a special meeting in April to kind of make up for that.
So we'll have a March, April, May, June meeting scheduled. We just haven't seen that.
So generally, in a normal year, when we have a February meeting, it would be February and March, and then May and June, and then I think there's no meetings in August, so September, October, November and December. So
So-
really, really heavy on the end of the year.
Okay. The reason why I ask is because I have here a copy of the budget, the staff report to the city council about what our action motion was about that $1.125 million. And it says in your report, staff reviewed the request with the Financial Advisory Committee, who voted to recommend that council direct staff to review the immediate 1 to 2 year asset funding needs and use the remaining balance to further reduce the unfunded pension liability. While the staff disagree with this strategy, when looking at long-term citywide needs, staff understands the urgency in paying down the city's unfunded pension liability. With that, a new analysis was completed using fiscal year 2023 budget numbers. Parentheses, fiscal year 21-22 budget numbers were used for the February calculation. And staff recommend no action be taken until the fiscal year 21-22 audit is presented. So that means that when that's presented, then when we get that formally, then we should be discussing directly how to allocate funds. Is that correct?
That's this. That's this. This is the fiscal year 22,
Right.
like, new analysis.
So where did the 1.125 million go? Is it
It's,
in some part
it's
of that?
part of the $10.7 million. So because we didn't use the 1.2, it's, the 2.3 is available.
Okay, so it's just want to be clear that on our agenda, when we have that, will be a discussion about how to allocate these funds to be recommended to the city council.
That's this. That's what we're doing right now.
But we're not going to discuss, we're planning on doing that today?
Well, I'm presenting this information so that you can know what is there, so that next time when we actually bring the audit, you can have thought about this and have that, if you want to make suggested changes, you can do it then.
Good news is actually a bigger pot of money to be allocated. Okay.
Does anybody else have any other questions? Did you have more, Mark, that you
I
wanted
did,
to?
just one more, just the 756. So let me just see if I can read this back to you. So basically, CalPERS, I'm assuming, or maybe it's the city pension, or is it the CalPERS? Maybe both? Okay, so both pensions are projected to increase the annual contributions in next fiscal year and the fiscal year after that, and this is establishing a reserve to pay for that increase. Okay, so is that, so I guess the first question, is it CalPERS or the city or both? It sounds like it's both.
So I would focus on CalPERS.
Okay,
The other fund is slowly winding down. And so there's a potential funding strategy to, basically at this point, the unfunded actuarial liability, the UAL, for the closed police and fire pension fund is about equal, if not higher, than the annual payout. So the idea is to slowly draw down the investments while increasing the pension tax contribution to the annual payout to those retirees. And that way, there's nothing left in the investments when the last person dies. And, because either way, at this point, the city would basically be paying the same amount into the fund, whether it was pay-as-you-go or putting it into investments.
It's kind of pay as you go. is
Yeah.
What we're talking about.
Basically. So that one, we're kind of switching to pay-as-you-go as the fund has less and less participants in it, or as the plan has less and less participants in it.
Okay.
CalPERS is really, that's what's budgeted in the general fund operating budget. The closed police and fire pension plan is paid for 100% out of, excuse me, out of investments and the pension tax override. There are no general fund contributions to the closed police and fire pension plan at this point. The 756, whatever, the idea is to use that to offset the increase in the CalPERS UAL that is in the general fund over the next few years.
And that's CalPERS numbers because they project out the future contributions.
So some of it is CalPERS numbers and some of it is we had a separate analysis done by Bartel and Associates who has gone out further than the 5 years that CalPERS projects. And I've found that the Bartel numbers are more accurate than the CalPERS numbers over the last 5 years.
Okay.
So, yeah.
Okay. We might ask for more material or something when we're
Yeah.
doing the subcommittee, but at this point, that's.
And the idea with this $756,000, I guess call it maybe a set aside or something, is that it's part of the general fund and it can be allocated, but it could also be reallocated.
Exactly.
Okay, so that gives flexibility to the point where if it's needed, it could be taken back out for something else.
Exactly.
But that's the downside also, is that it could be taken back out
Right.
for something else, as opposed to setting up something like a Section 115 trust or something like that.
Right.
Okay. A couple other questions I just had about the audit. Just curious, did they have any management comments, or are you at a point where you can share anything like that yet?
Yeah, I do know that they're still going to have a comment about our end of year closing process and how some of the journal entries aren't made exactly how they want, I guess. We have hired an accountant, and we are working on doing a monthly close now instead of just the annual close that we had been doing. And so that we're slowly getting to the point where it's nothing that affects, fund balance or anything that is day to day. It's more the entries that we are not perfect on are the, balance sheet accounts, the, some of the debt, like how they record the debt for GASB purposes, and the modified accrual basis accounting magic, weird things.
Okay. How many adjusting entries are they proposing?
I don't know at this point. I don't think it's that many this year, because I used last year's to do this year's closing entries. So I got those ones.
Great. Okay. Any other questions?
Yes, I have a copy of the, I think, if I pulled it up right, from the 2021 audit. This is
Fiscal
the
22.
22 audit. In that, it states on page 30 that there's a net pension liability of approximately 44 million and a net OPEB liability of approximately 5 million. OPEB is something post-employment
Post-employment
benefit?
benefit.
Other post-employment.
Other.
It's healthcare.
Other?
Post-employment benefits. It's retiree healthcare.
Okay, so am I correct to understand that both of those numbers really go together as a unfunded accrued liability, or does?
Yeah.
Right? Okay, so according to this audit in 2021 audit, it was approximately 49 million UAL, which is unfunded accrued liability, which is the same thing as unfunded pension liability. And I'm repeating this so that it's in the record and anybody who's watching can understand, because it took me a year and a half to figure that out, that they're one and the same. Okay, so my question is, do you have an approximate number, or did they, in their draft, did they have the same kind of numbers for those two things, the net pension liability and the net OPEB liability for 2022?
I do have those, but I do not remember off the top of my head what they were.
Up or down, or what, you don't know?
It's approximately the same. They fluctuate they're going to fluctuate year to year based on actuarial assumptions. Our unfunded, our closed police and fire pension fund had a massive change to its actuarial report because they decided that the fund will no longer be active in 5 years. So like all of a sudden the funding period went from 10 years to 5 years, which, so there are, anytime the actuaries make, different, or if there's an investment gain or an investment loss or whatever, I mean, it changes it. It's a number that we have to pay attention to, and it is a number that we have to address, but it is a number that is going to change day to day, and depending on which
What was the year
actuary you
where
ask.
it was, where the discount rate was negative or something? So
Yeah.
which year was that?
I don't remember, but at one point they had, CalPERS was what they considered super funded, and they stopped making people contribute to the fund,
Well, so I'd like to get that just so I can compare, because there's a reason for I'm doing all this, because I'd like to get a year-to-year for 2020, 2021, and 2022, a UAL balance. So, and I want to know which one was, and so we can communicate that, oh, that one went crazy, that one changed a lot, because that's when the stock market went down, correct? And everyone's pension,
So you're talking about the year that CalPERS had the negative return.
yes,
That was this most recent year, which
is what year?
which we do not have the actuarial
So
report for yet.
the actuarial reports, and correct me if I'm wrong on this, but they sort of lag like a year back, right?
Yes.
So when we get our fiscal 22 audit, we'll have the fiscal 21 actuarial report that's feeding the unfunded accrued liability. So those numbers are always trailing a year behind our audit numbers. And when Mark and I did that analysis last summer, we had actuarial valuations through 6/30/20, but now we have them through 21. And I'm just going off the cuff here because I don't have the numbers in front of me, but the fiscal 21 plan year for CalPERS was great because they had a really positive return that year. It was
18%.
18%, which, by the way, massively trailed, I think, every other public pension system in the country. I think they were actually dead last. I'm not positive about that, but they underperformed, relatively speaking. So 21, the discount rate was 7%. They returned 18%, so the unfunded accrued liability went down by quite a bit. But in the fiscal 22 year, we know that their fund performance was like minus 7%,
It was negative 6.1.
Okay.
yeah, for that year. And their discount rate is 7, so they're assuming 7% positive. So we know it's going to shoot up, but that report is going to trail, and that won't be out until
And that was why I
next year.
sort of joked at one of the last meetings where I didn't want to show you the
Right.
most recent CalPERS reporting because it is not very, it's very rosy.
Right. So you said that it was a negative return?
In fiscal 22, we know the investment return was negative 6 or 7%, something
Okay.
like that.
All right.
And also I don't want to go too far off topic, but I read in the fiscal '22 CalPERS funding report that they reduced the discount rate to 6.8%. So it was 7, I think it had been something over 7 before, maybe closer to 8%. They reduced it to 7, and now they've taken it again down to 6.8%. So that means the liability is going to go up because of that. But in general, that's probably that's a good trend, right? Because even 6.8% return may be hard to accomplish on an annual basis. And every time they don't hit the discount rate, the liability, the unfunded liability just shoots up.
One of the huge issues that sort of caused it's an issue, but one of the things that really made it an issue for local governments was when CalPERS reduced the payback, I do not remember.
Amortization period?
Thank you, that word, amortization period from 30 to 20 years. I mean, taking a third of the time off of the time you can pay back a loan is really difficult. And that's what happened, and that's why all of a sudden the UALs are skyrocketing.
That's when we went from 20 million to 32 million, I think, in UAL.
Well, and it's difficult because there's also a year, I think it was either 2016 or 2018. Do you know when the JPA closed and it merged with the city plan? It was 18. Yeah, so in 2018, the city management was in a separate CalPERS plan, and that merged with the city plan, which it looks like there's a huge increase in the UAL, but what it's really doing is just merging the two plans in 2018.
Is that the miscellaneous tier 1?
No, it would affect all of them, because the tier that you're in is determined by the year that you started with CalPERS. So, for example, I didn't join CalPERS until 2018, and so I'm considered a PEPRA or yeah, but what is it? It's Public Employee Retirement Reform Act member. After 2013, anyone who joined after 2013 is you basically have a lower payout in retirement. The miscellaneous plans, either you get a little bit more on your percentage per year, or you can retire earlier. Those plans are more expensive. As we get more and more CalPERS members, our liability will decrease, and you can see that. I most recently put together some information on the funding of all of our plans, and using the 2021 or the most recent valuation, our PEPRA plans are more than 100% funded. But all of our miscellaneous plans are not. And so that's really where our liability is. As miscellaneous members retire or move to different cities or whatever, and we get more and more PEPRA members, we'll have less of a liability.
Mm-hmm. Okay, any other questions? I feel we digressed a little bit there on that topic. I think, does that wrap it up for the audit discussion?
Does the audit include something about risks to the city, like material financial risks to the city or anything like that?
Yeah, the auditors each year send letters to all of our attorneys asking if they know of anything that is coming up that would be, a dollar value to the city. We also get information from our the JPAs, our general liability provider, and our workers' comp provider that are basically actuarial valuations of what we should owe over the next whatever.
But they wouldn't comment on the pension or something like that? They wouldn't say, okay.
Doesn't the audit have this risk factor thing where they measure low, moderate, severe risk on different aspects of our budget, or is that something else?
No,
Or does it?
no, it's just the audit.
What am I remembering where
I
there's,
think you're thinking of the state auditor's report.
yes,
Oh.
okay.
Yeah.
That's the one, thank you.
Okay.
State auditor's report, and this is
The
the audit.
This is the external audit, which is really looking to see if our balance sheet is fairly presented and our income statement is fairly presented, and that we have good controls and all of that kind of stuff.
It's complicated.
That does remind me, when you. Sorry. When Mark was asking about the risk exposure, and during the November meeting, I'm looking at my notes from the November meeting, and something that I had asked was, the litigation expense was high back then, and I asked, what could you share about that? And you said you would look into it and see if there was anything that could be shared, and I guess what I was getting at was if legal expense or litigation expense or something like that is really high, higher than budgeted, does that mean we have exposure to some sort of a lawsuit and that there's, something coming down the road?
So, yes. Litigation expense is something for when we actually are in a lawsuit or, are looking at settlement agreements for something, and that's what we code to litigation expense versus legal expenses, which is normally what I use to try to avoid litigation expenses. So I think, the title of those things is available when most of these items are discussed in closed session with counsel and counsel. But the title of the, item being discussed is generally on the closed session agenda.
Okay. All right. Thank you. Okay. Any other questions or points on the audit? Right. Do we need to take public comment on this item? Is there any public comment on item 5-1?
Mr. Bone?
Yes, thank you again. I can tell some people on the committee have been doing some homework and appreciated that very much. I'm a little unclear about exactly what was presented to you tonight. Was that the summary of the official audit that will be officially presented to you next month in that special meeting? And does that preclude the council from making recommendations on payments or Section 115 trust tonight? And if they don't make those recommendations tonight, do they lose that ability in the special meeting? I'm just a little unclear about the discussion. I know you don't comment on things like that, but just from my perspective as a viewer. Secondly, I did submit a letter, my fifth one. I think it's about 4 pages or so. And quantity, I'll tell you up front, doesn't necessarily make quality. But I did submit a 2022 CalPERS funding level and risk report. And I hope you got it, and I hope you got it in sufficient time in advance of the meeting to review it. I would strongly, if you aren't aware of it and haven't seen it before, I urge you to read it. It's painful, it's long, it's a difficult read. The positives are there's an executive summary up front and there's a conclusion section at the back. And if you just had to, you can just read those two and you'll get a pretty good flavor of what's contained between those two sections of the report. It was alarming to me. I read CalPERS newsletters to employees, and I'll absolutely tell you it's just filled with nothing but happy talk. Happy talk, happy talk, everything's fine, look at all we do for you. You read this one, it's different. And I found a 2020 version of the same thing, and it mirrors this 2022 version. I suppose they're fulfilling some fiduciary duty to their members and to cities by doing this, but they talk about what happens when cities or agencies cannot meet their funding requirements. And it's called a termination process, and it is flat out ugly. So I would urge you to read that, try and understand it. And I also request in there, maybe you could share it with whatever respective council member that appointed you, so they're educated into this problem. This is a very serious matter, and this report reflects it. 6 times, I think, throughout the report, they talked about the termination process and how it affects cities and how it affects past employees and current employees. And it's not a pretty picture. So I hope you, if you haven't had a chance to read it, I hope you will. I strongly encourage you to. So that's that. I also spoke about perhaps making a recommendation to council about continuing the Zoom meetings because there's such a large cohort of people that really need to understand and watch what you're doing. It's so important. I can't tell you. Finally, I see my time is out. I'd like to commend the Finance Department and I presume the Finance Advisory Committee on enrolling the city in the camp program. I think that's a smart move. I think that was addressed in Finance Director's report to you. So I think that's smart. You're just trying to maximize your income from our assets. And I think the figure 4.5 was indicated, and that is, I'm sure that's better than we were doing. And any little bit helps here. Respective to the pension returns, CalPERS pension returns for fiscal year 2022, on that report, I submitted to you the risk report from CalPERS. On page 4, there's a graph, footnote 3 talks about it now being 4%, minus 4% for the fiscal year 2022.
Mr. Bone,
Yes,
sorry, you're over time.
sorry, I apologize. Thank you very much.
Okay, thank you for your comments on your comments. So I think that concludes that
I
section.
want to follow up to that.
Okay,
So I want to confirm, I received a copy of Mr. Bone's letter and a copy of the 2022 annual review of funding levels and risks from CalPERS. Did everyone here receive that?
yes.
I did not.
Okay, so this was submitted, and I don't understand, I mean, it's a public comment, and is there some reason why it's not
it is
attached?
It is in the
available
agenda.
on,
It's attached to section 4, I
yeah,
believe.
it's attached under public comment.
I checked with Heather on that, and that is attached on the HTML version of the agenda on the website.
Okay.
So that's in there, and we definitely did receive that, and the pension subcommittee will be meeting, and we'll be reviewing that in more detail.
Okay. And so in the past, Mr. Bone has submitted 4 other letters, and I don't know which were, if any of them. I think maybe one was posted as part of the public record, and any written email is supposed to be permanently attached to the appropriate meeting. And I would like, to make sure that all 5 of them are properly attached for reference. And Kyle, you said you didn't receive this?
I did not receive it outside of what's attached to the minutes, or which is attached in today's agenda.
I think that's the same thing. There's a letter, and there is a CalPERS report, fiscal 22
Gotcha. No,
annual
I can see
funding.
that then.
Okay.
You did, okay, you did get it?
Yeah.
So
Okay, just want
I
to make
think
sure.
the original email went to the Financial Advisory Committee, and you might not have been
I was
on
not
that
on that.
distribution list.
Got
So you'll get those going forward. Okay, I think that's it for that topic, and we should move on to 5-2, which is the quarter 2 budget review and budget update.
Back to me. Okay. Oh, I have to share my screen again. So if you read the staff report for the budget review for fiscal year '23 quarter two, you'll notice that it's a little bit shorter than normal because we are pretty much right where we anticipated we'd be. Revenues at this point, which this is for quarter two, so ending December 31st of 2022, are at 48.5% of budget, and expenses are at 54.8% of budget. Expenses are always going to be a little bit higher because we have front-loaded items like our pension UAL and our insurance contributions, software payments, things like that. So it doesn't surprise me that we're over 50%, even if we're only halfway through the year. That is normal. Our revenues, they're behind slightly, but we haven't received, this does not show the December sales tax returns, which are always in higher because of the holidays and everything like that. So, I mean, personally, I consider if we're within 5 to 10% of what we budgeted, we're good. We've budgeted correctly. Budget is an estimate, so it'd be weird if we hit it right on. So I did point out that, here Public Works seems like they're slightly underspent, but in general, I'd say we don't want Public Works to be, when I say generally 5 to 10%, I exclude Public Works because Public Works anticipates things are going to break every year, but they might not. And some of the things that break are really expensive. So if we hit budget or, heaven forbid, exceed budget, something went horribly wrong in Public Works. So I think that they're on track for everything. That said, we are also including a budget update as well as the budget review for fiscal year '23. Now, this chart right here shows the original budget that was passed in 2019, the revenues, expenses, and then the budgeted deficit. There are a handful of items that have previously been passed by council as amendments. There was a staffing update back in, I think it was May of 2022, that included a risk management analyst position, a project manager position for Public Works, and something else. There was appropriation associated earlier, like I said, the climate action plan for street tree planting of $30,000. The electric vehicle charging grants and the heat pump installation grants were minute approvals by council. And again, these are also associated with that climate action plan funding. But they are in the operating budget. They are not associated with the reserve because the reserve did not have the funds at the time. The idea is during the year, like I said before, when I calculate that 1/3, I basically back out what we've already spent, and whatever was left, if there is a surplus, would be suggested to go into the Climate Action Plan Fund. So what we are requesting now as staff are adjustments to both revenues and some expenses. Revenues, when we passed the budget in 2019, obviously there was the pandemic all of a sudden, and 2019 or was it 2020? I'm going nuts. It was 20. I keep saying 19. I have no idea when anything. Well, I know when the pandemic happened. I don't know when I passed the budget. There was a lot of hesitation around budgeting for revenues during the pandemic. Originally, everyone was like, your sales taxes are going to go way down. And that never happened, but we budgeted very conservatively in revenues. We weren't really sure what was gonna happen with property taxes, and then everyone decided the pandemic was a great time to renovate their houses, so property tax values have increased. So these are the totals on this slide here, and then I also included the breakout of what we are suggesting. We are suggesting to increase the taxes as shown on this slide, to bring them up to a little bit more where we are actually in fiscal year end 2022, and so far what we've received and what we anticipate to receive in 2023. And so and then at the lower end of this slide, you'll see that there are some additional revenues. These are offsets of the expenses that Public Works is requesting as increases that are funded by special revenue transfers. And so while we're requesting an increase in the expense, it would be offset, like I said, by revenue from a special revenue. So for example, Measure M with the parks, or Measure R for creeks and open space, different tax measures. So there's a $0 effect to the general fund, but we do need the additional appropriation from council to make the actual expense. So this is a breakdown of what we're requesting. And I wanted to bring it to the Financial Advisory Committee before we bring it forward to the council to see if you had any questions or comments at this time.
I have a question. Sorry. Can you go back a slide?
Of course.
So I feel like the first slide, you don't need to go back to it. The message was revenue's kind of close to what we thought it was going to be, expenses kind of close to what we thought it would be. But then the message of this slide is we think we should increase budgeted revenue by 1.6 something million dollars. So I'm trying to figure out how those are related.
So the revenues are they're not like even throughout the year. So like I said, sales taxes that were collected by businesses in December, we don't receive until January. So you're going to see a massive increase in sales tax revenue. Property tax, we get the second half in April or something like that. So yes, we're on track based on what we budgeted, but we anticipate having more in the future, or more in the next 6 months.
So that means with sales tax, for example, right now that's running at like 63% of budgeted revenue just through December 31st.
Right.
But you're expecting that you're going to get a lot of revenue in the month of January based on holiday shopping and things like that will be reported and collected in January.
Right. And you will also notice that, so for example, property transfer taxes, those are, they've already hit 100% of budget. So that's helping that 48%, but even if we reduced that down, we're still going to be within that 5 to 10%. But adding this 1.6 million kind of fixes the larger items, that the sales tax, the property tax, that we, like you said, are 60%, whatever, so.
So that means that you anticipate that there will be an additional close to 1.7 million in revenue that's actually collected beyond what you had budgeted for.
Correct.
And what was the budgeted deficit?
The budgeted deficit originally was 2.37 million.
Okay.
And with the requested changes, it brings it down to 1.4.
This says adopted budget deficit was 2.5 based on the 5-2 attachment 1.
I'd have to go back through and make sure all my formulas are working right.
Okay. Okay, so we're still projecting a deficit, but the deficit is about $1 million less.
Correct.
Than original budget. Okay. And this will be, if this happens, if this budget deficit actually is realized this time, this will be the first time in the last 3 or more years where we actually realize the deficit based on a budgeted deficit. Because in the past, we've had staffing vacancies that helped us make this up. So we budgeted a deficit, but we ended up with a surplus. But we don't really have that much of those staffing vacancies anymore, right? So this is really going to come to pass, that we will run a deficit this fiscal year.
It's coming. I mean, staff try to obviously not spend when we don't have to. So ideally, we're not going to spend as much as we have in the budget. We've had the philosophy question before of how are you going to budget? We budget expenses assuming that every position will be filled throughout the year, and that, for, middling emergencies to make sure that we can pay for things throughout the year. At some point, the question came up of, well, shouldn't you budget for what you think you're going to fill for vacancies? And the issue with that is, one, if I have a great candidate that comes along and I don't have the budget for it, I can't hire them. But two, then all of a sudden, okay, I fill that position and next year it's fully funded and my budget keeps going like this. So the idea is I'd prefer to budget for the ideal, what we want to have filled and what we want to have, to know that this is where we want to and should be. And I will always budget revenues conservatively. Even increasing here, for example, the sales tax, I'm still below what our sales tax consultant thinks that we're going to bring in by probably a couple $100,000, because I don't want to come in under. So I would prefer to budget conservatively and have a surplus that we can use to pay down pensions or to fund asset replacement than to budget for, anticipated vacancies and then have something happen where we can't, fulfill taxpayer services.
Do you have a sense of what's the vacancy rate this year as opposed to last year or the year before?
It fluctuates. I mean, police were doing really well for a minute there, where I think they only had like 1 vacancy, and now they're back down to more than we would like. The same thing with Public Works. They were down a couple of maintenance people, and I think they're fully staffed now. So that's great. But I mean, we never know.
Are these positions permanent, or are they kind of temporary needs?
Most of them are permanent. When we do bring the budget forward, we have a staffing schedule, and I think that most recent, there's 113 scheduled full-time, well, not full-time, FTEs, full-time equivalent employees. We have a handful of permanent part-time employees, but not many. Any temporary part-time staff are not included in the FTE count on the staffing schedule. But the departments just budget a bucket of money every year or each budget cycle for part-time staffing. So some of them are, but like recreation aides are temporary. Our parking enforcement people are temporary. But most of our employees are full-time.
Yeah, so I guess my takeaway or my comment is just that it feels like this year the deficit's probably going to be real. Maybe it'll be a couple $100,000 less than what's here because you're still budgeting conservatively, which I understand. But if there's really a deficit, and then we're setting ourselves up for future deficits because we're hiring more staff that are going to be permanent staff, right? I mean, that's the desire, is that these people are going to be permanent. I don't know. I mean, if this were my city, right? If I was running a deficit, I wouldn't be looking at it this way. I'd be doing the opposite, you know? So I guess
specifically, the risk management analyst was hired to hopefully reduce some of our costs.
Yeah.
So workers' comp claims, for example, they are working on safety things and different risk mitigation procedures and all that kind of stuff. So, I mean, that position specifically is looking to, the litigation costs and all of that. That position specifically is ideally going to reduce our costs over the long term. The project management position that we asked for will generally be funded by transfers because a lot of the projects that they're working on are going to be will be projects that are associated with special revenues. So for example, the Parks and Open Space parcel tax or different things like that. So their salary will most likely be covered in part by the special revenue transfers, but it's very difficult for Public Works to facilitate a lot of those projects without an additional project manager. So we had to include the full salary, but there will be some coverage of that salary. And that was what was presented when we actually brought the staffing update. I'm trying to remember. That doesn't include, so we do have one temporary full-time person, and they're associated with the American Rescue Plan Act funds, our CARES Community Engagement Specialist. She had a 2-year contract with the potential to extend based on the need and the funding of the programs that were created with the American Rescue Plan Act fund. But that is not included in here because this is general fund and she is specifically budgeted in the American Rescue Plan Act fund.
Are you going to be going through the budget to actual?
I wasn't planning on it, but I can,
Yeah,
if you have questions.
Quite a few questions on that.
Sure.
Excuse me. One thing is that the police department, I believe, I went to Coffee with Cops last week and talked to Sergeant Torres, and he said that the full contingent of police would be 25 officers, and they only have 20 at this point in time. Is that correct?
Sounds accurate.
And that the shortage of around 25%, 20 to 25%, is endemic of the entire area, San Francisco, Oakland.
Oh, it's countrywide.
Yeah, they just can't hire because there aren't good qualified people at this point in time for a variety of reasons. So are we, the last few years, you budgeted for some vacancies, correct?
I don't think so.
No? So, all right, so then for the police, what's the budget versus, and so if we don't have enough people, then the existing force of 20 has to do a lot of overtime.
Correct, which makes up for the cost.
And does overtime cost more or less than hiring a new person? So if you have 20 police officers covering for one person overtime, by doing overtime, does the overtime since cost more per person or less for that? You know what I'm trying to say?
I do, and at some point, you're gonna get into like accounting 101, what's the cost of a widget and how much like overhead does it take? You're gonna come to an equilibrium at some point. It's obviously going to be a cost savings if there's one, but if there's five, it's probably not going to be a cost savings. And it's also just really hard on staff. I mean, in addition to, that, you're more at risk for injuries and your workers' comp could go up. So, I mean.
Retention.
Oh, yes.
That's right. So how are we, and how are we doing for that? I mean, I think that's this police, public safety is an essential service. And I wish the police commission would be dealing with something like this, but I don't think they're going to because they're dealing with other social issues. So we have to. So what's your view of the situation with the shortage of police and how much it's costing us? And if we could hire one more person, would we save? I guess I kind of heard you say if we could hire one more to cover, we would maybe break even. But if we could hire two more, then we'd be saving.
I can't really I haven't done that analysis.
There are numbers on page 3 about the police salaries, and it's running 45% of budget right now, so it's slightly under budget. If you would expect 50%.
Are we actually running overtime, or are we just understaffing?
We do have overtime.
No, it's over, yeah. So you have an approved budget of 8 million, and the last year was 7.2 actual. Is that for overtime, or we did hire some people though, didn't we?
Correct, and that, like I said, for a minute there, we were almost fully staffed, and then we've lost.
Oh, really?
Yeah.
We had 25 at one point?
I think we were down like one or two, but we had hired a handful of people, and then I know that they're in the process of hiring a couple more, I think. But I mean, the other thing is once you have, Torres was correct in that it is difficult to hire police officers now. Everyone is trying to hire police officers, and because of the climate, nobody wants to be a police officer. And so in addition to the cost of overtime and everything, you have recruitment costs. You have to make yourself look good. And so you have to make sure you're, advertising in the right spots. You have to make sure that you have, the right brochures out. And there are people that, help cities do that kind of thing. And so there are costs associated with that too.
Okay, let's get down to the real estate. Page 1. You're budgeting, last year we have a 9 million from property taxes. And that's an actual?
Correct.
Why would property taxes go down? Property taxes stay the same. They should be going up 2%.
Right, so the approved budget here was passed in, I think it was 2020. Right, no, 2021, June 21.
2-year budget.
Yeah, I don't know what day it is, clearly. It was passed in June of 2021. And so I didn't know what the fiscal year 22 actuals would be before it happened. So when we budgeted conservatively, not knowing what people were going to do renovating during the pandemic and all of that. And that is partly why we are asking to increase the revenues as part of the mid-year budget update.
So you want to be able to add $800,000 from potential to,
Correct.
okay, then that makes sense. I think that, now, is there any reason to believe that property taxes wouldn't go up 2%? I don't think anybody's going to be applying for a property tax reduction in today's climate, even though if they think that property values are going down. Everyone's assessed value goes up 2% every year, correct?
I think it's 1%. I thought it was 1%.
Nope, the assessed value goes up 2% a year,
Okay.
all right? The 1% is the bond, the county-wide bond rate, and then we add on to it, and that 1% goes to the county, and then we add around 0.35%. But, I get my tax bill every year, goes up to 2%. So
It doesn't look like it I mean, the year-to-date, if you double it, it's 9.1
Yeah, it's
million
9.1, yeah,
compared to 9.076.
right. So it went up by about
Double this.
30,000 is all.
Yeah, that's just 9.1, which is barely higher than the 9.076. So I'm not sure it actually is going up 2%.
But we're in the ballpark, right? So if the budget for the year was 8.1 and we're going to increase it to 9.1, that must be about $1 million of the 1.7 million that you're requesting the adjustment.
Yeah, let me pull up the slide again and just kind of look at it. So there's a handful of things that are included in that property tax line on the budget. And when I showed the slide and in your attachment, it's broken out. So your county tax update for property I'm requesting the increase of $500,000. Unitary is also in there, and I'm requesting $30,000 increase. And vehicle in lieu, the property tax, is in there as well, that I'm requesting $400,000 increase.
You're talking about the unsecured property tax then?
No, that is a separate section that I am not requesting that we increase. Because of the pandemic, a number of restaurants shut down and it removed basically a lot of equipment or unsecured from the property tax rolls. So I'm requesting an increase of $930,000 to that property tax line.
Not 800, 930,000. Okay.
Sorry, what is vehicle in lieu?
So when you buy a car, or no, that's sales tax. It's the registration fee, right? I don't know. They send it to us and we just, I'm pretty sure it's.
But it's not housing related, it's
No.
motor vehicle.
It's motor vehicle. It's still a property tax.
Personal
Okay,
property
personal
of some
property,
sort.
unsecured.
Yeah.
Okay, and where is the transfer tax? Okay, here it is, page 7. You break out transfer taxes, and the actuals was 3.2, and the improved budget is 1.8. So that's smart, because that's the number of sales that we're going to have, that we are budgeting for a decrease in number of sales,
Correct.
which is I agree with.
But we're running ahead of that in terms of actuals.
We are running ahead of that. However, we have lagged in the last few months, so I'm hesitant to increase the budget and then next year have us go back down to normal. So I'd rather have that surplus.
Could you remind me what quarter one is?
July 1st through September 30th?
Okay. So that's, the market was still okay last fall. So, and then the winter was very slow, but it's always pretty slow. So going forward, this quarters 3 and 4 could be very disappointing. Okay. Talked about police. I think it's important that we go over staffing, because as Mark said, that maybe that's something we need to be aware of more acutely. And I'm going to repeat this for the public, that 70% of our budget goes to staff, salaries, pensions, and benefits. Okay, so, and how is the finance? You feel fully staffed now in the finance department? Oh, Cassie did say a no.
Ideally, however, we did lose a staff member recently, and so we're recruiting to bring ourselves back up to fully staffed. Once we get that staff member, we should be in a good spot.
Oh, sure. That's an important staff person. I'm for
They
fully
all are
funding the
important.
finance department.
Every
We in
single one of
agreement
them
there?
is very important.
Huzzah.
We passed a tax for EMS, correct?
Yes.
And when does that start to be collected?
It will start to be collected for the next property year, so you'll receive that on your next bill, which will come out in the fall.
So there's no advantage to that for 2023.
Correct, for
Okay.
2023. In 2024, you will see you'll see it affect the general fund by ideally reducing the transfer from the general fund to the EMS fund to cover that.
Of about approximately,
500,000.
okay. The community development had a real up and down expenses and I think income too, revenue. Is that
So,
because of so much, I mean, could that be attributed to
yeah,
some large projects?
some of their expenses are directly related to permit review and permit, there are some permits that they don't review in-house, they send out. So obviously, with the insane amount of permits that we got over the pandemic, they sent some of those out, which increased their expenses in professional services, but we also increased revenue associated with that. That was one of those things where we definitely could not have anticipated what was going to happen in that regard. So, yeah.
But are you happy overall with how, I mean,
Yeah.
that things were working the way they're supposed to work? I mean, if we're doing more projects, we have to hire people, we have to do that, and
Yes.
in the end, those projects will be paying property taxes
That'd be great.
and make sure that their assessed value gets properly reassessed.
I know the assessor's name and his email, don't worry.
Okay, thanks.
I have a couple questions also. On page 2, in the administration section,
Yes.
salaries and benefits and other expenses are both running, like in the 80 percentile, 80% range of budget. What's going on there?
So salaries and benefits there include the pension unfunded liability payment.
Okay.
So that's always going to be
Okay.
real insane the first quarter. So that doesn't surprise me. There are also some, we don't budget for leave cash outs, like vacation and admin leave cash outs. And those often happen in December because the benefit is a calendar year benefit, even though obviously we budget on a fiscal year. So you'll see in December, oftentimes there's a spike when people weren't able to take their leave, they cash it out. And so that'll kick some of the salary lines over budget. It's never affected the overall budget that much, so we still don't budget for them. But it's a small amount comparatively. And the other expenses are our insurance, and again, that's all paid in,
Okay. Thank you.
Now for the final. So this budget to actual review is going to be going to council,
yes.
correct? Okay. So I have an idea that I'd like us to consider. And can you bring up onto the screen the combined city accounts and the value of cash investment by fund type?
Oh boy, I didn't open that one. Give me one
They
second.
go right after each other.
Yep. Give me 1 second. So you want the cash and investments attachment?
Well, yeah, I think
Okay.
they're right after each other. This is kind of the summary statements of, you have the Mechanics Bank.
Yep.
And that's our pooled cash. That's what we have. It's cash assets, correct?
Yes.
So my idea is that we start going forward, we have a line item, and I would prefer it on this page, that is the unfunded pension liability / unfunded accrued liability year over year. So that as we see, and I preferably just, I don't know, I'm just trying to figure out where it would be best placed, because I see that the city council gets this budget and actual review or something similar to it every year. And the biggest number, which is anywhere from, which has kind of grown from like 30 to 45 to maybe $50 million, isn't even in this. And when a business is analyzed, they have their assets and debts. You like to see, when you're looking at the health of a company or a business, what is your total assets and what are your total debts, liabilities? And you look at them together because there's a ratio. I know, I'm not going to say I can give you the proper ratio.
She can.
Okay.
Current ratio or something.
But I think educating the city council starts here. And they need to get started used to this fact. So my idea is that December 31st, 2020 balance was $37 million. December 31, 2021 balance was $43 million. December 31, 2022 was $45.5 million. And then we have the closed police and fire pension account plans, which are 3.5, 4.1, and 3.1. So how about having a line underneath that say combined city accounts, pooled cash, closed police and fire pension plan accounts total, and you add up the 37 million and the 3.5 million, and you get 40.6 million. And then under that, you have the unfunded pension liability for whatever it might have been at that time, December 31st, approximately. You could say approximate. And that you do it for each year so that, and then if we don't have it for 2022, we do. Wait a minute, we will have that, correct?
So you're kind of comparing apples to oranges in that. I think what you're trying to do is basically create the audit, but on a rolling basis. Because if you're putting the cash, which is only a portion of the city's assets, and the unfunded liability, which is only a portion of the city's debts and other liabilities, you're not really showing a full picture.
Yeah, I think basically what you're driving at is it would be really nice if we had a balance sheet. Because asset, cash, investments, liabilities, these are all components of the balance sheet, and also that would have to include fixed assets, all the capital things that we have. But I know I asked about this long ago, and there's a reason why it's just not as simple as saying, oh, here's the balance sheet. And can you talk to that a little bit? Because it would be really nice to have that more current picture of what's going on more often than just when we get the audit.
So there's a handful of things that go into that we don't calculate all that regularly. So for example, the the infrastructure, we do that once a year. We look at our construction in progress and we capitalize, the number of miles of road or sewer that we've replaced each year. And we only do that once a year. We only do that at the end of the year. So I could run a balance sheet account. It's not grouped like they group it. It's not grouped in our accounting software like they group it in the audit. So it would be very manual for staff to be able to run that. And so I'm not sure that it would be as beneficial because it wouldn't necessarily be, it'll be accurate to a point, but it wouldn't be, like the audit.
Okay, I just came up with a concept, okay? And the concept is, I want the city council to see the UAL, UPL, year to year, okay? To see it, acknowledge it, and start thinking about it. Because if they don't see it, acknowledge it, start thinking about it now, they won't be prepared to make the hard decisions by the end of the year. And
What about the idea of having a dashboard or something like that with just important line items, like the UAL or the capital reserve balance and, things that are under the required minimum balance, that sort of thing. I don't know, because I totally see what you're getting at, and it would be nice to have that number sort of more in front of everyone. And there's this reporting package that cash and investments is a thing that can be reconciled, and we get a statement, and we know exactly how much cash we have in the bank. So that's why it's on the schedule, I'm guessing, is because it's easy to come up with that number. But there are other numbers that are harder to come up with. UAL is kind of a moving target, but it's a really important number, and maybe there's, I don't know, maybe there's some other dashboard kind of a report that we could suggest a format for to put it on, put
It
it
could be
somewhere.
a separate page, a separate thing that we just have in there. So, you've convinced me that the idea of putting it against these things is not educating, because if, we'd have to do all this other stuff, and I don't want you to have more manual calculations. That's not, right? So the goal, and I just don't understand how, now that we've been working on this for 2 years, that the city council doesn't understand what the biggest number in our finances is and how it moves and changes from year to year. It doesn't, you can put in, estimated, or, right now I'm just thinking, okay, we have the number, we can have the discount rate, you could have the number, and then, the return was 18%, and then it says negative 7.4%, whatever it is. But so then have a table similar to this that is just on that, and I'd love to hear them starting asking questions about it. Well, what does this, really? So what's that? What's the discount rate? I'm still figuring it out. And if they don't know what the discount rate is, it's going to be difficult for them to make the big decision. And how do we, the Finance Committee, educate the City Council? And that's our job, is to advise and to educate them and to advise and educate the public. And so what other things could we put in that table besides, what was it? There's 2 things. I have to go back and forth. There's the that total is made of 48 million is made up of 43 and 5 at that one thing that I had here. So, right, so break it down and then total it up and put in the discount rate for 3 years. And that table, let's just call it a table. Information, these discount rate changes from year to year. Have a line that says 90, when was it? When they went from 30 to 20 years?
16?
Yeah. That's a big deal. You just said it today. It's a big deal when they did that. And then when they went from 10 to 5, what was that for?
That was the closed police and fire pension plan when they re-looked at the mortality.
Which changes how that number is calculated, right? Can you say that?
Yes.
So put that in there. And, this is for information, informational.
Can I make a suggestion?
Yes.
So I'd like the direction that you're going and that Kim said. So I guess, I don't know if this is part of this agenda item or not, but I'll just say, I feel like the idea of a dashboard, and that there's a lot of different things about, the idea is to educate the council on the financial health of the city. And that includes assets and liabilities, it might include cash flow, it might include budget deficits, a lot of different things. And to some extent, the state auditor has their dashboards, and I know that those aren't perfect for us, but, they're a good start. And maybe, I was thinking about this for the pensions, but maybe what you're suggesting is maybe something broader, that we could just build some basic metrics to put in front of the city council of this is the financial health of the city, or these are some measurements of the financial health of the city. This is maybe how it compares to some other cities. This is how it's changed over time. Very simple, you know, like you said, sort of a dashboard with red and green and so forth. Does that?
I mean, I like that idea. It's basically a dashboard of key performance indicators or KPIs. It's like, what actually keeps you up at night? What are you looking at within the dash, or within all like 40 pages here? Where are you focused, and what's drawing your energy? And that's what we should educate the city council about, those specific things, so they don't have to dig through 40 pages to figure out what is the health of the city.
And I understand that this format has been around for how long?
When did I put it together?
Oh, so
4
you put it
years?
together, this
Oh, yeah.
particular format, but there was always something similar? Or
No.
did you? No? Okay. That's before we came along.
Yeah, I have been here for 5 years now,
Okay.
so.
We've only been here for 2.
Yeah, I think this is a useful discussion, right? Because this format is so much more than we had before, and it's taken this body 2 years to get enough of a handle on it that we can even start to talk about the key performance measures, indicators, right? But through all of this education that you've been doing to educate us, we're honing in on things that we think are important, and I guess, yeah, I think that would be a useful addition to this because it's extensive. It gives you everything, but you have to be able to get through it. And I wonder how much the council is able to really get through it. And maybe it would help to have a more of a high level, here's the summary. If you don't want to read through all these numbers, here's what we think are the high points. And then, of course, they have the backup.
It's like revenues are at 50% of expectations, expenses are at 55% of expectations, but we think that's okay because general government expenses are running at 80%, and that's because of this big insurance payment that we made up front, is like the bullets under that.
My staff reports normally point those things out. The first quarter one definitely did. But I didn't this time because we were a little bit closer to, the 50% mark. But yes, if there are things that you would like me to start to include, I can definitely look into how I can include those. I think you kind of hit the nail on the head when you said it's taken, some people, a couple of years to get around this. And so my difficulty is always, where's the line of how much is too much versus what is too little, and, what really should, when should it be presented and where should it be presented and all of that. But if there are things that you think would be beneficial, definitely let me know and I can figure out how those can be presented.
Okay, so how do we want to proceed with this? Does somebody want to draw up maybe this is a good thing for Kyle to jump in. You spoke up, so.
I'm happy to take a stab at something.
Yeah, just to list out, a few of these key metrics that we'd be interested in tracking. And, to see how finance department feels about that, and if we could come up with something, because I think where we're all going with this is all the detail is great, but it's hard to see the forest for the trees kind of thing. And maybe there's a cover page with some graphics and pie charts or something that we could put on there. And particularly
this
the
like a
UAL.
one-page thing?
Short, yeah, really
this.
short and graphic maybe.
Okay, and do you feel that you have
you understand what we were talking about in terms of the UAL and the UPL and the
I think I have the
discount rate?
gist of it.
Because, yeah, but perhaps.
happy to
You
work
could talk
together.
with either of them who are on the pension subcommittee. So we had a pension subcommittee.
Right.
For these two, and then I was on a revenue subcommittee with Judy.
Gotcha.
So, that's why, so you're taking on a specific thing that, these two have been working on for a while, and I listened to everything that they say.
Yep.
And all the graphs, whatever that they put in, they educated me, so perhaps.
And I think I can work with one other person,
We can only have one
five,
person,
one other person.
Right.
because the
And work on
subcommittee has to be
something.
less than three.
So,
I'd be happy to.
sounds good.
Okay, that'd be great.
Great.
Okay, great.
So I make a motion that we form a subcommittee of Kyle and Mark to provide a one-page, what'd you call it?
Dashboard.
Dashboard that covers the summary general health, what would you call it, of the city in a digestible manner for the council and the general public.
I second that.
She's writing.
I can't write that fast. Okay. Member Bowman?
Yes.
Wait a minute. You got to have input from the public.
Oh, before we vote,
Yep.
is there public comment? No. Member Bowman?
Yes.
And Chair Trainer?
Yes.
And Member Papalia?
Yes.
And Member Priven?
Yes.
Motion passes.
Okay, great. Is there any more discussion on the Q2 budget review? No. Okay, so I think we do need to take public comment on the Q2 budget review. Is there any public comment?
No. I would like to just ask, is there anything that anyone wants to, or that you as a committee would like to say about the suggested updates when it goes to council? The increase in the revenue and the handful of expense requests? You can also say you withhold judgment, that's fine too.
I understand your point about we should really be careful about obviously adding permanent positions. But I think these are all done. These are decisions that have been made and people are in place. And so we're just at this point appropriating the salary budget, right? We're allocating additional salary budget to cover things that have happened.
Yeah, so the salary one specifically, that was already passed last May. The additions below, I don't know if I can share it, but
Those are largely going to be covered by the green tax.
yeah, there were a handful that aren't included, or that aren't covered by transfers in, and it was an increase to economic development professional services. There's a contractor that they work with to help with different promotional things and, what is really best for us to do to help businesses. An increase of $20,000 for finance professional services. We contract with a grant consultant. They help with writing grant applications and administering the grant programs. They've helped us bring in quite a few grants, actually, and we would love to keep working with them.
They probably pay for themselves, right?
Basically, yeah. Maybe not in general fund money, but in like other
Grant funds received.
Yeah,
for
exactly.
Other projects.
And then an increase to the Public Works professional services for a new HVAC servicer. We had some issues with some previous stuff, and so we've brought in a new technician company that is doing wonderful service for us.
I don't have any comments that I feel like I would make to this. It's either things that have already been approved, or it's things that are largely revenue neutral with respect to the special revenue stuff. The grant consultant probably pays for themselves with grant revenue received. So to me, this looks reasonable.
Yeah, I agree. I guess it just kind of backs up the question of approving additional staff in a year when you've budgeted a deficit and don't have any reason to believe that it's not going to end in a deficit. It's not actually going to end in a deficit this time. So it's kind of, yeah, at this point, it's too late, but it does call into question maybe the process.
I think, and I think that was sort of a problem that we encountered when we first formed, right? Because we had 4 meetings a year, and the budget was approved by council before we saw it. So we didn't have any opportunity for input, and it was like the meetings were done backwards. And I think now with the proposed calendar, when we get around to, so we're coming into year 2 of a biennial budget. So right, is that right?
We are in year 2. I will be
in year 2.
bringing in May the next biennial budget for fiscal year 24 and fiscal years 24 and 25.
So the May budget will be critical, right? Because that's where we really have to look and see, are we adding any more permanent, staff positions and just things like that, right? And I think probably this body is opposed to that, as a general idea about adding more permanent staff costs. So I think the May budget that's going to set the next 2-year budget cycle is going to be really critical for us. But I feel like it's done, this current budget process that we're in, and these adjustments look reasonable. Some of them have already, happened or been approved, and I think this is reasonable.
Thank you.
Okay, so we didn't have any public comment on that section, which was, sorry, I got to get back to my agenda. That was 5.2. So then that moves us along to the next section, discussion and possible action on matters related to the following, 6-1, chair and vice chair selection. So the committee needs to appoint a chair and a vice chair for this 2023 session. So I would like to nominate Mark Priven to chair the committee. Do we need a second on that? Or?
Yeah, do you want to be chair?
Sure.
Okay.
I'll second it.
Okay. Yeah, I was thinking that you didn't really, you only got a chance to do 4 or 5 meetings, so there wasn't any need to get new people.
To change it?
Ah,
Right, and so, but if you'd like, so that, I think you would, you're just kind of getting the hang of it.
Yeah, just getting started,
Okay.
yeah.
So, just to let you know, if you have something like this, it's good to have everyone else come in, and then you can come in as the
Okay.
chair to that. So
All right.
You jumped right in there.
Gotcha, sorry. I was only too eager to pass it along.
So so we have a second on it already, so we're having discussion.
Okay,
So in my discussion is that I kind of think it would be good to kind of keep the way it is going, so that we build on that, and although I don't have a particular stake in it, just that I think that you just kind of got it going, and take another year, and you're going to be around.
Ostensibly.
You're not going anywhere, man. So then afterwards, and you
Sure.
can do it.
I'm happy to.
So that was the concept.
Okay.
But since we have a motion,
Well, we can.
Can I ask if Ken would like to remain chair, or would you
can,
like to step aside?
I do kind of feel like I just got started with this, so I wouldn't be opposed to remaining. I was assuming that we had to rotate it. We don't have to. Okay, I mean, I can withdraw that motion.
I nominate Ken for chair.
I second it. Okay, well, and we are supposed to have the public to come in on it after we've discussed it, but I think we've discussed, so the value is of continuing it.
Yeah.
And keeping, without having to go through changes of things. We've already got a lot on our plate. And so we should take a moment then to make sure the public gets to comment if they care, and then we could go to a vote.
Is there any public comment? There was none.
Oh, there it is.
Gregory Bone.
Go ahead, Mr. Bone.
You're also very polite. That's my comment.
We are, we're not, I just love working on this group, okay? I wish Judy was here, because I'm so pleased that we're all back.
Me too.
And I got a great sense about Kyle too, so.
We also have to do a vice chair, so you can talk that.
Okay, so given that we're going to just, go with what we've been doing, then do we want to just keep the vice chair? I think
Okay,
we
I'd
should
like
just
to
keep
make
that.
an amendment to the emotion, an amendment to the emotion that we have Mark be the vice chair too. And do I have a second?
Yes.
I think Member Bowman has to accept the amendment because it was his motion originally.
Yes, I accept the amendment.
Robert's rules.
It's in the charter.
Right.
Right, that's in the
Do we have
charter,
I
right?
did not read that section.
We have an amendment.
Okay.
So we can vote.
All right. Member Bowman,
Yes.
Chair Trainer,
Yes.
Member Papalia,
Yes.
Vice Chair Proven.
Yes.
Motion passes.
Okay, great. So then we'll move along to section 6.2. Sorry about that, Mark.
It's all good.
Sugar sweetened beverage tax. So I know that Heather has some items to just educate us on about that.
Yeah, I put this on just to have you guys have a discussion about if you would like to do anything. There isn't really let me do this first. Hold on. Okay, do that. Jeremy, we need to replace this mouse. Okay. So the sugar sweetened beverage tax passed in November 2016. It is a tax on sugar sweetened beverages, soda, some juices, I guess, I don't know. And part of the ordinance requires that the council hold a study session every year on what to do with the proceeds of the funds. Now, this is general fund money. It was passed as a general fund tax. It is not required to be used in any certain way. However, they are still required to have this study session. The ordinance requires that it says it here, Parks, Recreation, and Open Space Commission, the Social and Economic Justice Commission, the Transportation Commission, and Albany Unified School District representatives, as well as our city staff reach out to dentists and other health professionals, come and make recommendations on what to spend this money on. Clearly, 2016 was before this committee was created, so it's not on your work plan. You are not required to do anything. I put this on here just so that you guys could talk about whether you wanted to do anything as a presentation at this study session, or if you'd like me to, or if you wanted to put together a subcommittee or create a memo, or if you want to just wait and do this next year. I'm looking for kind of direction as to if the committee would like to do anything with this.
How much was in the budget last year and how much was spent?
So we budget approximately $260,000 of revenue a year. Again, this is general fund money. It is already in the budget. Anything that is appropriated as part of the study session is some of them are additional appropriations. Staff budget the crossing guards and say, we think that, the sugar, sweetened beverage tax will go towards funding crossing guards. But I think Healthy Music and Movement is also in the budget. But a number of these things are additional appropriations. So in other words, they would increase the expenses shown in the general fund budget if they are approved by council. So again, general fund money, the revenue is budgeted by staff in the revenue for the general fund. The expenses, we're obviously going to fund crossing guards, and Healthy Me Music and Movement is something that council has historically wanted to fund. So there are some things that we put in the budget, but for the most part, anything else that they want to fund besides crossing guards is an additional expense added to the general fund.
Personally, I think we could review this as part of the biennial budget. I don't see a need for a special meeting just to us participate, or at least for me, to participate in a special meeting just on the allocation of this. That's how I feel about it.
I agree with that. I didn't realize that some of these things would actually increase the expense budget and had to be approved. So you're saying the crossing guard, which is the biggest chunk of this, is already factored into the budget. But so how much are we talking about increasing the general fund expenditures by with the rest of these things?
So generally, they try to stay within the $260,000 budgeted. So if you factor in the crossing guards, that leaves about $60,000 for them to say, okay, we want to fund these programs. Last year, they funded a sponsorship for the stroll to the shore or something, where people walked down to the bulb. And there was a festival that was, promoting something. And so it's a small amount of money. But the big thing that comes up often is people want to know what's left over. So they ask me to calculate how much sugar, sweetened beverage tax money have we brought in total for the entire length of the program, and how much have we spent in, from this chart, what's remaining. What's remaining is just general fund money. I think last time I looked at it, it was about $500,000. I have to do another calculation. That was a year ago. But so people oftentimes, express interest in setting that money aside to use for more of these programs. But it's just general fund money. So if they do that, it's reducing the general fund balance.
Is it that different than a reserve fund that you talked about at the very beginning of this meeting for that 1/3 of the?
So it's different in that they haven't actually established a reserve fund and removed the money. For the climate action plan reserve fund, they actually, council voted to establish a reserve fund and have voted to appropriate money to that fund. That hasn't happened, so this is just part of the general fund. We get into potential questions of legality when we start treating general fund as special revenue. If you're just putting it in a reserve fund that can be reallocated at any time, it's just like any other reserve fund, whatever. But it needs to be clear that that money can be reallocated at any time, and it is general fund money. But we don't have one of those right now. It's just general fund money.
I'd like to explain how this passed. The people who had the soda beverage tax decided to do it as a general fund tax, which meant that they could pass it by 50% plus 1, rather than a 2/3 tax. So the people who devised this program knew going in that they were going through the lowest threshold for approval, and therefore it is general fund money. I know I'm not going to win any friends by saying this, but we've been discussing a $1.6 or $5 million deficit. And I think it's important that we establish as part of our duty that everything is on the table in terms of balancing the budget when it's a general fund. Okay? And that's our job. It's not going to make me any friends. I think all of them are great. The programs are fantastic. Just that, how do we pay for it? And I remember being in this hall whenever it came up about the crossing guards. And for whatever reason, the school department wasn't going to fund it. Okay? So the parents came down here in an uproar and said, our kids need to be safe, okay, going to school. You have to do something, city council, okay? And I'm not going to guarantee it, but I kind of remember a figure of around $70,000 being the initial outlay for the crossing guards that the council approved that night, you know, or shortly thereafter. Now it's up to 2023.
120?
No, 198, did I read this right? 198,000?
Oh.
I read that right, okay? For the city to pay for crossing guards for the children because the school, and so another thing I want everyone to know is that there's two entities in this town. There is the city and there's the school. And the school board is elected separately. They have their own budget. They have their own property. They manage their own properties, raise their own bonds. And the city council, which we elect, manages the general fund and everything else. So, and want us to, it'd be nice to know what the initial figure was. Sometimes numbers stick in my head, okay? Because it was like, and I remember being here, I said, we gotta do this, we need it. I was right there in this audience, advocating for it. Our children, you know, people come here for the schools, we need to have safe, okay? Now we're in a different time. And the reality is that I believe a minimum of 50% of this money should be going to cover our deficit or our pension liability. Because that's the reality. And that if people want to have these other programs, they need to be working to finding alternative funding for that. And the school, maybe, the school committee needs to come up with the funding in their budget for this crossing guards. If it's literally going from 70, you know, what's it gonna be next year? And I'm not saying that they're overpaid or they're not doing a good job. I saw them yesterday at the Marin and Jackson in the rain. I turned right in Jackson to go up Marin, get on the freeway. And I'm going, God, it was really horrible weather yesterday, okay? Really horrible. But the question is who pays for it. So I think we need to consider advising the council that this is general fund money and that at least 50% of it should be used to cover our deficit or other things, and they can figure out how to manage it, the rest of the money, and split it up the way they feel best.
I might have missed this somewhere, if it was somewhere else, but do we have a projection for what this is going to be in 2023? Because I just pulled up the itemized numbers for the projections for 2023 of the expenditures. They're more than any of the previous year's revenues. It's like 300,000
So,
expenditures.
and that was, they were using some of the like
Surplus.
reserve, yeah, the general fund. And it was just added to the budget. Yeah.
The thing that feels sort of wrong about this, I guess, is that the sugar sweetened beverage tax was conceived as a thing that adds to the general fund, revenue approximately $260,000 per year. But what's happening is it's because the crossing guard is factored into the general fund budget, but all these other things are not actually in the budget, it ends up just adding to our deficit instead of helping with the overall general fund picture. So this is a tax that we're collecting, and yet it's adding to our deficit because of the spending. That just doesn't really make sense. I feel like either these expenses need to be budgeted into the general fund expenses, and then fine, but to spend whatever, over 300,000 when it's only bringing in 260,000, it seems like we're just digging ourselves a deeper hole with this.
So staff don't put them in the suggested, like, staff recommended budget, except for the crossing guards. After the study session, when council says we want these things, I go in and put them into the operating budget prior to it being approved by council. So it is in the, some of it is in the operating budget. I think are the bike lockers on here? No.
What those bike lockers?
So there are some items that are basically direct, they aren't included in the operating budget. They're just general fund appropriations on their own because they're not operating expenses. They, like this for 2023, they approved the installation of bike lockers down at the Bulb to be paid for by sugar sweetened beverage tax money. that is a larger expense, and so it wasn't, and it's a one-time thing, so it wasn't put in the operating budget. It was just a general fund appropriation outside of the operating budget. But yes, it obviously affects the general fund balance and all of that.
And I want to include the fact that we're in a budget emergency, okay, perhaps. And so if there's a change in our revenue from everywhere else, then that could be, then how this soda tax isn't going to go away. It's going to be collected every year. So the question is, what's going to happen this year, and what's our budget going to be this year? Deficit going to be this year?
I guess my concern with this conversation is just kind of picking on this one tax, and I imagine there are other taxes that are general fund taxes, am I right? That money gets spent one way or another.
So the only two general fund taxes that have a encouragement clause in them are sugar sweetened beverage tax and the most recently passed increase to the UUT. That's it.
Okay.
Increase to the what?
Utility users tax.
That's a 50, that would passed with 50%.
Yes, that was passed with, it's a general fund tax. However, they encourage council to use 1/3 of the increase associated with the tax measure towards climate action plan items.
But then, so when you said that the climate action plan funding, it was a general fund funding, but they were using the reasoning that had to do with how the tax was passed, just like this one. And so there are only two taxes like this right now, revenue streams, that was voted on with only a 50% plus one vote to make it pass.
So
Although I don't know what the actual vote was.
there's only two general fund taxes that have clauses in them like this.
All right.
There are more than two general fund taxes, like property tax and the property transfer taxes, and all of those are general fund taxes. But these two are general fund taxes that have this like odd earmark language in them, but they're not really special revenue fund. They are general fund money.
And the monies that we're talking about are already budgeted for, or this one is not budgeted for? Are the school guards already in the budget for this year, or is not?
So 2023 everything is done. The question, and when I present the 2024 and 2025 budgets, the staff presentation, there are still steps staff have to go through, but generally it will include the revenue from the sugar sweetened beverage tax and the crossing guards. There may be a handful of other things that are included that council generally approves, and we will include just because we assume they're going to approve them again, but they could, ask to remove them and add something else. And I will make those adjustments after they have the study session. But the only things that at this point staff generally plan for are the revenue and the crossing guards.
And when will you be presenting that when will the 23-24 budget be?
So the sugar sweetened beverage tax study session is being held April 17th. think. Yeah. it's
Our
something like
meeting is April.
that. Probably, when we schedule this special meeting, it'll probably be the first Wednesday in April. Then the budget will come to FAC in May. So I will have included the sugar sweetened beverage study session adjustments when you see it, which, to Member Priven's point, Vice Chair Priven's point, you could address or make any comments at that time if you would like as well. It's really up to you guys. Again, I put this on the agenda so that you could talk through how you want to address
I
it.
think we got to get our opinion in sooner than later.
I think it's going to.
After the study session, it's going to be too late. So if we have an opinion on this, it should be going in before the study session. So we could have a more, I mean, we could have this on the agenda for our next meeting, or we could act on it now. But we need to get, if we're going to give input, I recommend that we do it before the study session, because.
That makes sense.
Yeah,
then-
I would.
And then we could get, and then we get the people to, so I think it's a great idea to have it in the next meeting, and have it well publicized in advance.
I will put together something more for you at your next meeting so that you have more to talk about. I just wanted direction.
Yeah, I think we need to do it before they have the study session, because once they have that, that's, the recommendations are going to come out of that, and that's what's going in the budget.
I agree.
I think we would, I see your idea about, putting a minimum of 50% of the revenue from this particular tax towards reducing the deficit, but I don't think it's even possible, given how much the school crossing guards are going to cost. That's going to be almost $200,000. So, I mean, there is kind of an issue of escalation of that cost, right? Because that only leaves another $60,000 for everything else that they might want to do, even if we wanted to just sort of keep this neutral. But then there's also the proposal of, hey, we haven't spent every year all of the tax that was brought in. So we're looking at the possibility of having to expend, however many more tens of thousands of dollars, right? So I think that having some sort of a recommendation of, let's use some of this towards funding the deficit, I like that recommendation. It's going to sound really pretty draconian, I think. But it's what we should be doing, given a budget deficit situation, instead of just adding more expenses to the budget. We can't keep adding more expenses to the budget every time something comes up, right?
And we're dipping into the surplus that we had to create the expectation for recurring expenditures in the future with these new programs.
Right.
I will bring it back. Do we have public comment?
Yeah, do we have public comment on this?
No.
Okay, no public comment on agenda item, that was 6-2, right?
So it is after 9:30. You have to vote to take a next consideration of another agenda item.
Okay, so we've got the work plan agenda item, which that's discussing preparing the 23 work plan. We could elect to defer that to the next meeting, or do we want to, consider?
I move that we extend the meeting for another 15 minutes.
I second that.
Member Bowman,
Yes.
Chair Trainer,
Yes.
Member Pavalia,
Yes.
Vice Chair Pervin.
Yes.
Motion passes.
Okay, so let's talk about the 23 work plan. So as we discussed kind of at the beginning of this session today, There was the report on the work plan from the first two years, or whatever that period was. And I think we haven't given them our report on what we did. And so now we're tasked with talking about what should be on the work plan for this current year. So, would it be helpful if I pulled up the work plan from before, and we can talk about the items that were on that, and if we want to just keep those the same? Let's see, I don't know why I can't get that. Okay, there we are. Work plan, final report. Okay, so the first work plan we had was from July 1st, 21 through June 30, 23. So technically speaking, I guess, we're still operating under that work plan according to the work plan that was passed before. And let me just read through the things that were on here. Regular reports, so review the year-to-date or quarter-to-date budget to actual reports, so that's required. Report on audited financial statements, that's also required. Pension funding overview is desired, and I think that, maybe that should move to a required item instead of a desired item on the work plan. And then for recurring action items, we had maintained sound and increased transparent management of city financial resources. The FAC will review and report to council on a biennial basis non-administrative finance policies and practices. That's required. So that has to stay on there. Again, I don't think there's a lot of wiggle room on this. The FAC will review and report to council the biennial budget. The FAC report to council will accompany the biennial budget. That is also required. We will review the quarterly budget updates prior to review at council, and report to council will accompany the quarterly budget update required. See, all of these things in this work plan that are talking about our report is required is what's making me feel like we really should be doing a memo that goes to council, because our work plan says that all this reporting is required. Then there's another thing that says we will review and report to council significant financial short and long-term issues facing the city, including but not limited to the review of the state auditor's report. That's a desired item. We'll review the city's pension and other post-employment benefits, OPEB obligations, desired. Enhanced communication and transparency programs. The meetings will be open to the public and will allow for and encourage diverse public input to finance and budget issues prior to those agenda items being heard by council, required. Meetings will provide a regular forum for the public to learn about budget processes and financial investment strategies of the city's resources, required. We haven't talked about the investment advisory stuff. Revenue oversight, continue to assure that rates of revenue are kept current, revenues are collected, and Albany is informed of funding mechanisms in use in other California cities, desired. The FAC may explore and recommend to council additional sources of revenue for the city, desired. So we did that with the revenue subcommittee this past year. Review and make recommendation on all proposed bonds or other debt instruments to be issued by the city, required. That hasn't happened as of this point in time. Appoint a committee member to attend California League of Cities meetings to gather information about financial challenges and successes of other municipalities within the state, and the committee member will report annually to the FAC. That's the only one, and that was the last one, I think. And that's the only one that I think we felt like when we reviewed that before, I think there was someone on council that has a membership to that League of Cities. Who is it? I can't remember. I have it in my notes somewhere. But we were basically using that California League of Cities website as a resource as situations develop. And it was used to help develop the revenue subcommittee's report on potential additional revenue sources. That's the only one, really, that very last point that I'm not sure if if we want to have that on there again, or keep it on there. And then are there other things? So from, you know, this is what we did before.
Could you tell me more, tell us more about that? I remember us talking.
So I said, let me look at my notes from November, because we talked about that.
Did we consider having someone from the committee going there?
We thought about that, but it's not really a possibility, I think, because we don't have, I don't know, we're not a member, or we don't have funding for it, or something. Do you remember what the issue was there, Heather?
I don't know off the top of my head. I think you guys might have determined that a council member goes and staff attend these items, so we were kind of covered.
So it said, okay, my notes just said, the California League of Cities, Judy went to the website, collected info, we're using it as a resource. They have a conference which is held there will be a conference in September of 2023. The finance-specific one is held in December in Monterey.
Was Judy interested in doing that? Did she just happen to
I
bring it
think
up?
she was the one who did the research. Councilmember McQuaid is a member of the California League of Cities.
Yeah, the conferences do cost money to attend.
Yeah, I think what we sort of decided about that one was, we don't have a budget to go attend those conferences. And at this point, we could just refer to the website for ideas on revenue sources or things like that. I don't know, we could leave it on there, but I don't think that we really have we don't really have the ability to do a lot with that point.
Where did this item come from? Like, whose idea was to create that bullet?
Was it Judy? Okay, that came from Judy Kerr. She's not here.
Maybe we should hold off until
She's
she's here.
Until she can report on that. So, I mean, what do we feel about this? Do you feel like these things all should remain? Are there things that you feel are no longer necessary?
I think that we've gone over it, and we don't have to deal with this until the end of May. And we've brought up what we needed to bring up and get it into the forefront of our minds so we can let it go and
Okay.
close out this
Okay.
item if there's no public comment.
Any public comment on this item? Okay. Then I think that brings us to future agenda items. So future agenda items, I have a couple things that I'd like to just request, if that's all right. I've got to get back to the right notes, sorry. Okay,
Spread out, I'm sorry.
for the next meeting, in our work plan report that we finalized, we had said that we would talk about the non-administrative policy discussion at our February meeting, but it kind of keeps getting bumped. So if we could add that non-administrative policy discussion to the next meeting, if we could add an agenda item about pension update and discussion to the next, I don't know if these are more appropriate for the April meeting or the May meeting. Where are we going to have time to discuss these? But Mark and I are going to meet as the pension subcommittee to update the report that we did in July of last year with the next version of the actuarial report. And you had done a nice write-up of that, and I feel like we need to just kind of get a new memo put together to bring to the committee about just the update of all that stuff. So I don't know if it's possible to get a pension agenda item on the April meeting, or if that's too much and we need to put it on May.
We have a consultant that does some projection and fancy graphs for pensions that I want to bring in to talk to you guys as well. And so I think maybe we can do both of those next meeting along with the audit. And if we can put the policy discussion to when you review the biennial budget, because the policies will all be included in the biennial budget as well.
Okay, so let's put that policy discussion in the May meeting then, and we'll talk pension in the April meeting.
So is that being worked on now?
They have it pretty much done. I just needed to tell them when we want them to present.
Okay, so I'm thinking that after the subcommittee meets, we may have some specific questions that might be good for that person to be prepared in advance to, so anyway, that's why I was asking if the work's done or whatever, so. Okay.
I mean, they have just general stuff that they always present for
Right.
every client. So if you
Right.
have questions, they most definitely can answer them. So feel free to send them along and I'll make sure they're prepared.
Okay.
Okay,
I know, I was just looking back through some of our notes from last spring, and we were interested in finding out what's the projected percentage of pension payments as a share of the overall city budget, like running forward, as we look at this. Part of that 22 pension funding report from CalPERS talked about with the poor investment performance and the reduction of the discount rate from 7 to 6.8, maybe some other factors as well, they were seeing or projecting that employer agencies or governments would see between 5 to 12% increases to the required payroll contributions, which are already around 15, 16%, right? Something like that, so.
It really depends on which
plan?
which plan you're looking at. Because, yeah, the miscellaneous Tier 1 and Tier 2 plans, they're significant. But the PEPRA plan, it's 7%, which is not a small number, but they are smaller.
I think, questions like that are going to be more important because
right.
we know it's going up
Yeah,
and
so-
how much.
Yeah, so we'll come up with some questions and you can relay them to the actuary so they're prepared for. Okay.
I've got a agenda suggestion. Heather, can you make a simple 12-month schedule that says the benchmarks of the different reports and when you, first of all, when you want to give them to council, and then which ones, and then what should go to us beforehand. So we were always hustling last 2 years, trying to get there. And you know what you want to do with the council on your thing, and then let us know in advance and figure out whatever the remaining 7 sessions that we have. I don't think we have to be stuck in any particular month. The only time we can't meet is August. So you know best about how to fit those 8 sessions into the remaining months of the year. And then if we have that, then we know where we can plug in all these other things that we want to do.
Doesn't that kind of go it sort of goes in this calendar, right? And we had this proposed calendar for fiscal 22-23 with the 8 meetings, with the first one that was July 26th, 22, running through 11/1/23. And we have them all kind of like itemized out. So February 1st meeting, which is happening today, was fiscal 22 audit report, Q2 finance update, sugar sweetened beverage tax, non-administrative policy overview. So we did get most of that stuff. But I guess this thing could just be sort of updated, right?
Yeah, and then we all have it, and then when we look at it, we go, okay, I want to do a revenue thing, you want to do this pension thing, and we're not all trying to plug it in, and they go, okay, you're gonna come first with the pension, so I can plan revenue down their road
For the next
there,
meeting, yeah.
to whatever that point is.
So maybe it's just an update of this
Yeah.
calendar. It's not starting from scratch.
Yeah, it's not from,
I think we should also add the dashboard to either April or May.
Right. Maybe that should go on the May meeting because we're talking about budget anyway, and that'd be a good time to introduce, hey, here's the highlights kind of thing.
I like that.
When are we scheduled to hear from the investment folks?
So we just started making, we just really invested in January, the first few rounds. So ideally, and by that I mean we invested in a money market account. They're still kind of reviewing our investment policy, and they've made a couple of suggestions for changes, which will be included with the budget. I still have to go over them. So I don't know when, because they haven't really started working on like an actual investment strategy at this point. They're working with staff to work on that strategy, but we haven't actually implemented a strategy yet. So I will hopefully I mean, ideally it would be at the end of the quarter and then the next meeting. So when they start and then the next quarter.
So would that be like at the July meeting?
Potentially.
Okay. Okay. Any other agenda items for upcoming meetings? Okay, I think that's it. Do we need public comment on agenda? No public comment. All right, I think that means we have made it through
So
this
we
agenda.
do need to set the next meeting. The agenda says that the next meeting is Wednesday, May 3rd, but we are going to schedule a special meeting on April 5th.
Okay,
If everyone can just confirm, I'll send an email, but just so everyone has heard. Now I can let you end the meeting.
okay, all right. It is 9:57. This meeting is adjourned.
right.
Thank you.